This is Alan Farley from FX Empire. Square is trading sharply lower on Monday morning after a revenue miss and announcing the acquisition of an Australian fintech company. Looking back, the stock returned to the 2018 high right around 100 in June of 2020 and broke out after this very strong trend advance that continued into the first quarter of 2021. Stock posted a return of in excess of 300% in 2020, just a phenomenally good year, and then topped out right here in February above the 280 level. It sold off very quickly down to about 190. Now this has drawn the edges of a trading range that's pretty much remained intact for the last 5 months. As you can see, a rally attempt stalled just above the 786 retracement in April. That was followed by a successful test of the low in May. Now it's been ticking higher since that time, but it came right back up to this 786 retracement, which is also where we have this breakdown gap here, this hole in the wall gap, and it's turned lower. Well, now it's trading right around 235, 236, right along this sort of red trend line on Monday morning. It's not a particularly good spot. It's below the 50-day moving average, and we could get a swing down this way towards the 220s. Well, that wouldn't really be good news because we get back to this area here. As you can see, we have a high followed by a lower high followed by a lower high. Put these all together and we get a sell-off here, then you have a descending triangle pattern. But I think it's too early to sort of make that bearish prognostication. We could just as easily sort of settle right in here. In any case, it doesn't look like we're really going anywhere soon. If you're a shareholder thinking of buying here, well, you have about an equal chance of a breakout and breakdown in the next 6 months, and it may take 6 months or longer before we get a rally above this level or a sell-off below that level.